Good morning, traders and investors. It is Tuesday, October 7th. Just a reminder, I'll be sharing this discretionary trade a little bit after the opening bell this morning via email, so you'll get alerted and updated with that. Now, it's not a typical trade. We're not entering the market specifically today, and you're going to see that. But again, all the details will be there shortly. So let's move on to the markets. We do have equities pushing up again today. This market is primed and ready still for this continuation, this melt up. If we look at the daily chart here, we were really running up this 5-day moving average. It is primed and ready for potentially another pop and push and squeeze. I feel like we could see another push of FOMO here this week in the markets. And usually when we get bouts of FOMO, it is a good sign. It means people are they're climbing that wall of worry that they're missing out, and it keeps pulling new money into the market. Eventually, though, it will trigger a bigger sell-off, which is perfectly fine. It's just part of trading, and we're fully positioned and ready for that. Now, we do have money flowing in. It looks like pretty much across the board. Bonds are flat, but we do have the dollar up fairly significantly. Again, this morning up 0.4%, looking like it's breaking out of this bull flag pattern that we talked about. It does look like the dollar could have a pretty decent run up another, from where it is right now, we could see another 1.25% to the upside as we start to push up here. And we've been talking about how the dollar looks like it's trying to carve out this bottom and how it takes some time. And we're definitely seeing strength come in here. Now, when we see the dollar and we see gold performing well, we have gold up again today. Let's take a look over at gold. This is, to me, a very strong sign that there's problems brewing, big problems brewing. And of course, gold and the flock of money into all precious metals in mining space is confirming that. And it means we're getting closer and closer to a peak in this space. But again, we're in kind of bubble parabolic territory when it comes to precious metals and miners, and we don't know where the top is. It still might be another 20, 35% higher from here. So we just need, or even more. So we just need to continue to let the market mature and go from there. Now, we do have this PHYS trade on. This is a discretionary trade. A lot of you are wondering if we can just let it run and put a trailing stop on. Yes, you could totally do that. I generally, as I mentioned last night, I stick with my targets because, usually when you get into a trade, you start altering rules because it feels good. And then, you could hit this target and the market rolls over, and then you give it back and you're like, why didn't I just follow my trading rules? So PHYS, this is a bonus trade. I consider it pretty much like free money because it's just one of those opportunities like the Bitcoin trade we did. It's just, you get this explosive move and run. We hit our targets, we get in, we get out, and that's kind of how I go about that. So I will be locking in profits. We are about 1.5% away on our PHYS from hitting there. And this is not like it's a massive position, but I'm going to take that money and I'll be rolling money towards this new discretionary trade, as you'll see later this morning. And I think it's a great way to rotate and compound growth and move from one position that's kind of hit its levels and rotate into something fresh and unique. If we take a look over at silver is down a little bit this morning, a little more speculative, obviously, so it's shaking things up. It had a little bit of a sell-off on the 10-minute chart this morning, but it has rebounded. And the market right now is kind of just starting to chop around. But again, it's holding its ground. If we look at gold miners, the GDX, they are set to open a little bit lower. So there's a little bit of profit taking in that space. Yesterday, we did see a nice pop and run up in miners, and they pulled back just at the closing bell a little bit. But overall, they're set to open just slightly lower. If we look over at crude oil, we do have it down 0.25%. Again, it's really just floundering. We talked about this breakdown below this level right here, these lows, and how the market is kind of bouncing up. It might want to push up into the mid-range or move a little bit higher. But again, this was a pretty clean breakdown, and it was on some average to solid volume. And this will probably be seen here as a bit of a bear flag, however high it goes, and it could easily head on down to that next target, which we've been talking about for months, that this is the next target, down 55, 56 area. And if it breaks that, then it looks like it could go all the way down to 42, which would mean the economy weakening and all that stuff. Again, when the economy and economic data starts to turn south or sour, usually people start to dump oil. It doesn't matter what the fundamentals are on oil or what's going on. When the economy turns down, people naturally think less demand, which usually it does. And of course, people sell oil, and of course, it sells off on that. So that's kind of where we're kind of lingering here, is still lower prices for the energy space. Anyways, that's really about it. Not a whole lot has changed from yesterday and last night, and we're just going to let this market work itself out and see if we hit all-time highs again today. Okay, talk to you soon. Bye-bye.